Hi guys, welcome to another video of Ask an Accountant, sponsored by Bonmas Consulting. My name is Rampedi and I'm a tax consultant here at Bonmas. Today we're going to be discussing duties and taxes for imports. There are three different types of duties levied on imports. First are customs duties, then it's anti-dumping and countervailing duties, and third is the value-added tax that is charged on the goods imported. First, we're going to be looking at customs. But because custom is so wide and entails so many different variables, today we're just going to be looking at imports. So what are imports? Imports are goods that are brought into the country using different transportation methods: road, rail, sea or pipeline, or even air, as well as electricity, using electricity transmission cables. And in order for customs to secure their revenue, the importer must declare to customs the goods that they have brought in the country and declare which method of transportation they've used. And remember, if goods are brought in the country by post, a different process is then followed. And a different variety of goods that are brought into the country are either prohibited, or there will be inspections by other authorities. Now the question is, how long will it take for goods to be declared by customs? The national legislation gives importers 7 days to declare their goods, or 14 days given that the goods are loose or in bulk. The anti-dumping and countervailing duty. These are charges on goods that are considered to be dumping in South Africa and on a subsidized imported goods. These goods are subject to investigation into the pricing and the import initiative in the country of origin. The rate which will be posed will depend on the result of the investigation. These goods are levied on an ad valorem basis, which is a specific percentage value of the goods, or as a specific duty. This is a cent per unit. The amount and type of duty imposed on these products are determined by the following main criteria: the value of the goods, or the customs value, the volume of the quantity of goods, and lastly, the tariff qualification of the goods. Lastly, we're going to be taking a look at VAT. As a reminder, we have done a VAT video before. Just take a look at that and get a further understanding and a much better understanding of value-added tax. In South Africa, the VAT rate is 15%, and in regards to customs, this also applies. But before we get to calculate the value-added tax, we calculate something called the ATV, the added tax value, which is calculated as following. First is the customs value and 10% of the commercial invoice, and then you add any non-rebated duties and levies on the goods. And then that's where you get the ATV, the added tax value amount, and then you calculate 15% of that. That's when you know how much value-added tax is payable to SARS. For example, let's say the commercial invoice was 100 Rand, and then 10% of the commercial invoice was charged, which will be 10 Rand. Then an added tax percentage, let's say the percentage is 25% of the 100 Rand, which will be 25 Rand. So the total added tax value will be equal to 135 Rand. And you take that 135 Rand, you multiply by 15% value added tax, and that's how much VAT you're gonna need to pay, which is will be payable to SARS. And guys, remember, if you are importing from countries that are part of the Southern African Customs Union, which include Botswana, Lesotho, Swaziland, and Namibia, this 10% markup will not be charged. But if you're importing from countries outside of the customs union, then this markup will charge, vice versa for when you export to countries outside of the customs union. Thank you.